Friendly reminder that you are a friend from the friendly tower Friendville. And today we're going to look at the US Fed balance sheet. This is one of the most cardinal sins to speak about in crypto. Yes, you must not say what I'm about to say. And it's going to shock you, friends. Unfortunately, money printing, the US Fed balance sheet, the stock market Ponzi world, they are not as linear as we think. I'm going to start off with you. I'm just going to show you right now, friends. There's going to be a trap forming. I'm going to tell you right now. So I can already see the next crypto bull market trap form. I can see it. And we're going to challenge the notions about what the crowd majority thinks. And it's very obvious what they think. Everyone right now, and everyone thinks, okay, that when they drop the interest rates, okay, and when they activate the money printer, okay, so I'm going to write brr here. When they activate the money printer and they drop interest rates, people necessarily believe that this will push crypto to new heights, break a cycle, make a cycle, force the stock market up. It is not a 100% guarantee. Why? We're going to go through that today. So I'm going to show you the evidence first, okay? So here we go, friends. You are my friendly friend. I want to look at this. Most people in crypto, we believe that Bitcoin and crypto, we are directly tied to money printing and the Fed balance sheet. It is not 100% true to say this statement. Okay, the truth is, and I'm going to show it to you right now because you're a baby doll, baby cake. Yes, you are a pumpkin kite. The truth is, crypto goes off network effects. So what I mean by that? What I mean by that is when they print money, you see this printer? We're going to do a little cash symbol here to signify. When they print the money, a signal is sent to the market. Okay, so they print the money and then the poopy heads, the bankers, okay, the bankers, they get the first dibs on the money. All right, they are the poopy heads, and yes, there'll be a poo emoji. All right, now when they get it, a signal is sent out to the world. It's sent out to the market, and people then decide, do they want to stay inside this network effect, or do they want to go to another network effect called crypto? I'm going to put our crypto right here. So yes, that's true. So there are people here. When this happens, okay, this is exactly what happens, friends. You are a person. Here are the people. There's all of us. Everybody's dancing and prancing together. When they print money, me and you, we are outsiders. You see outside the bubble here? We do not get the printed cash. But when they print money, their Fed balance sheet goes up. You see the banksters? They get the money. They're able to plug the holes so their friends don't go to zero. Okay, they plug these fake holes just to keep the fiat Ponzi system going. Now, what we will normally see is people in crypto, Bitcoin maxis, Ethereum maxis, every single person. What do we keep saying? We said, number go up. The printer, everything's going to go up. But it's not so direct. You got to understand. I'm keep going to first principles. Because you are my friend, I love you very much. Thank you for liking, subscribing, press the bell button and all. I appreciate you. So I'm teaching you here some juicy edge. Okay? When they print money, we are the network effect. You understand? We are working. Everyone out there is working a wage to keep a bid on fiat. But when they print money and they disrespect it, you can then walk on over to crypto. And so the value of crypto, you see this circle? This value of crypto used to be small. And then as people kept joining it, right, Metcalfe's law, the value of the network got bigger and bigger and bigger. But here's the thing. Here's the important part. When they started printing in 2010 to 2016, the people who were in crypto back then, see the early movers who kept going to crypto, they were already pricing in the infinite balance sheet part, the infinite QE, the infinite money printing. In a nutshell, Bitcoin is diminishing returns. Why? It's because when they first started printing many years ago, the exponential gains were given to the first movers. People were effectively pricing it in. The people said, yes, they're going to keep printing for forever in the future. So I'm going to leave the fiat system as much as I can right now. And this is why, my friends, this is why Bitcoin did not hit 100,000 in the last cycle. It should have. I mean, it had every reason to. How dare you not hit 100,000 in the last cycle. How dare you? We had 0% interest rates. We had negative yielding bonds, 16 trillion. We had infinite QE. Why, oh why, could you not hit 100,000? Scamming insiders. And we already priced it in. I know it's not the answer you want to hear, but that's the truth. Let me continue, okay? Remember, the S&P 500 is in control. It's not this money printer thing. It's the S&P 500. So people are going to push the narrative I'm about to tell you in the next bull market. They are going to say, the money printer's on. They're cutting rates. The debt's going to go infinite. Therefore, Bitcoin's going to go 2, 3, 400,000, 500,000, a million. And that's probably going to trap everybody. It's not that. We are correlated to the stock market. Most likely the stock market can stop any party. Let me tell you this. Since the day I was a wee little pup, everybody told me S&P 500 is Big Daddy. When he wants to bend you over and slap you around, he wants to choke you and spit in your mouth. Yes, the S&P 500 will do that. And it will not even say thank you. It won't even leave a tip. It will just tell you to get out. The stock market will smash everybody. It is the dictator of everything in this world. The US stock market. You can't escape it. Okay? Now, I'm going to show you a chart now. So my chart here shows you, it's going to show you something interesting. Let's actually zoom in to show you, okay? You see this top part? This top part has, let's say you're going to zoom in. Let's do some friendship zooming in, friends. This is how we're going to roll here. This is how we're going to roll. And here we go. I want you to see this. You see here, this is the US Federal Reserve, their depository institution. So basically the reserves of the banks. So effectively, Jay Powell, whoever's at the Fed, he's the money printer. What they do is they print money. They go to, it's literally an Excel sheet. It's a Microsoft Excel database. And they go, hello, Mr. Bank, you are now richer. Yay. That's what happens. That's literally it. But they do it for the big banks. Okay. It is that simple. Yes, it is. They just dress it up with different names, but that's actually the truth. Okay. Now I want you to show this period. We zoomed in here. This chart is the US Fed balance sheet, basically the reserves. During this period, down to this circle, the balance sheet dropped 50%. Okay, this is a 50% drop. You see this minus 50%? So naturally, you would think, crap, if the US Fed, if these banking deposits are down 50%, surely the stock market would go down. Let me continue, my friends. Look at it. Look at this. The stock market actually went up 35% during that time. Surprise, surprise. What's going on here? Shocking. Absolutely shocking. They dropped the balance sheet by 50% and the stock market went up. So what's actually going on? Well, it's not that transparent. Okay, that's the truth. If you go listen to these other smart macro people, they're very smart, they're very intelligent. I'm very thankful. But it ain't the truth, okay? There is some mixing, matching, morphing, changing around the Excel sheets, changing names, making up stuff, moving things around. The money goes around somewhere, stays in places. It's all manipulated, okay? Now, if you were to ask me specifically what do I do, I don't know, but I can tell you right now. It wouldn't surprise me if the US Fed has, let's say, like 5 cockroaches, okay? 5 cockroach banking CEOs, okay? 5 people. It would not surprise me if he says, hey, we're going to print this money. It's a crisis, okay? And he's gonna say, hey, you know, only 3 of you are allowed to spend it right now. 3. To help stocks up. In whatever it is, give out loans or whatever, okay? And he's going to say the other 2, you're not allowed to spend it yet until we give you the word. You're allowed to spend it the way we want you to, the secret way of giving out loans and pumping up the stocks, whatever it is, when we tell you to do it later on, okay? Just to make it look like the system is still going up. That's what I think is happening, and that makes the most sense. And you know what else makes sense? Our friendship, because you can't put a price on it, friends. So I'm going to tell you right now, this chart, okay, just to clarify, my chart here shows a period where the reserves dropped 50%, yet stocks still pumped 35%. And I am here talking about a potential trap. It is not linear. If they drag it, if they cut reserves, it's not necessary that stocks go down in the short term. And if they pump up the reserves, they do more money printing, it's not 100% that our crypto is going to pump to the moon. We are not guaranteed any of this. We have to go off emotions of the market, emotions of the people. Are people wearing their pants? Do people wear their fluffy slippers when they go outside? This is the type of stuff we have to be paying attention to. I have a follow-up tweet. You are my friend. I've got to remind you. Look at this. The US Fed balance sheet provides long-term sustenance for the stock market. I'm going to show you this chart. This chart shows you the Ponzi right now. This is the chart in effect. You can see this orange line. This is the US Fed balance sheet. As you can see, it goes up over time. Why? Well, it's because everything's a Ponzi. The Ponzi system is collapsing. So as things start collapsing, the US Fed has to print money and then imaginarily take the toxic assets off banks and put it on their balance sheet. You might think this is some sort of like big convoluted thing. No, they literally go to the Excel sheet and they say, hey, you know how currently you think we have $100 billion? Well, no, change it to 1 trillion now. That's right, 1 trillion. That's it, out of thin air. We just push the button. We don't have 100 billion anymore, we've got a trillion. You go, okay, that's it, there's the new rules. That's literally how it works. I'm not even making this up. That is literally how it works. Of course you know how it works. That's why crypto was invented. That's why we have something called proof of work or proof of stake. We have transparent blockchains. That's why we made this, because they knew it works like this. Now, as the reserves go up, you'll notice something. There is a pumping of the stonks. The pumping of the stonks. So it's not a direct linear relationship, but when they take these stocks off, right? So basically, the toxic assets, the Fed takes them off the balance sheet. So there are basically zombie banks and companies out there. They should go under. You see when this debt is going up here, these companies should go under. But the US Fed goes, damn, man, if we let these guys go under, it will destroy the US economy. We'll have like 20% unemployment rate. I'm not even joking. They'll usher in the next Great Depression if that happens. So they basically kind of like swallow everything, and then they're in a nice way. And then they just basically take the toxic assets out and they make sure that nobody goes under in a very bad way. Okay. But here's the thing. During this period, they did not print money, yet we still got stocks to go up. Now, this is going to be very interesting, because how can I see a trap forming? You can see up here right now, the balance sheet is starting to go low. Okay, see this? They're starting to do this scamming removal of it. But remember, look what they did in the zombie virus. Look how huge the balance sheet went up. I want you to know something, okay? It is possible that this is the balance sheet right now. What I'm drawing right now is today's. It is possible that it goes sideways and down for a while, but then it starts to go up a bit. And it's possible that during this time, crypto is at the top of the bull market. But everybody will think it's just the start, because they'll think, no. What they'll say is, look how far we went up when the Fed balance sheet was going down. And now that the Fed balance sheet is going up because of more printing, we should go even higher. Yay! Perfect trap formed right there. Okay? What people can never understand is that there are insiders playing. Have you heard of BlackRock ETF? Have you heard of these insiders? They're poopy heads. Dare I say, they are even dingleberries. Yeah, they have hunchbacks. They drink room temperature water. It is possible that as the balance sheet was going down for the Fed, it's possible that the insiders are buying crypto. And then when the US Fed balance sheet goes up and they have to print, it's possible that this is like the final blow off for crypto. But everybody thinks it's just getting started. This is why it's super important. We go off human emotions. We don't watch this news. Interest rates, QE. It's all a distraction. We go off human emotions. That's the only pure thing, because crypto does not have this government third-hand type of manipulation scheme in it yet. Maybe one day in the future it will, but by that time, everybody's onboarded to crypto, and then they have to save the system from imploding. So here I am, continue, right? So just because the US Fed balance sheet goes up, okay, it doesn't necessarily mean our bags will continuously pump. We can still get trapped. There are periods where the US Fed money printing stalls and the stock market will go up. So what I'm doing is I'm trying to form a trap. I'm giving you a scenario, and for me as well, where we all get screwed. We all get screwed raw. Sandpaper, no lube. It's where the example I just showed you. What if the stock, what if crypto goes up, it's in line with a 4-year cycle, and then they start printing money again, everyone thinks, no, this time is different? It's very possible. Okay, so you got to be aware of this. We have to remember these news, they're just distractions for us. Okay, and let me prove it to you. I mean, I already showed you, right? You're a baby doll, baby cake, blueberry pie. You even understand how many of us got screwed because we looked at negative yielding bonds, infinite QE, 0% interest rates. None of it mattered. Did Bitcoin hit 100K? Nope. There were insiders, dingleberries, dumping up here. Bitcoin could not hit 100K. It had every single reason in the world to hit 100K. Michael Saylor, Elon Musk shielded it, for God's sake. Elon Musk, the most popular man in the world. And he bought it. He bought it, man. With infinite QE. We still couldn't hit it. That's a signal for us. Okay, it's a signal the gains are diminishing harder than we think. The world doesn't work exactly how we all think it works. It's not so linear. Okay, so at the end of the day, what do I mean it's not so linear? Well, it's most likely that crypto, we are just the slaves to stocks. That's it. If the stock market wants to roll over, it's going to say, who cares about your Bitcoin halvening? Who cares about your little cycle? Who cares about your little innovation? You're going down. And we have to respect that. Okay? That's just the truth. It's better to be safe than sorry. So you learned something today. You gained a competitive edge. We are preparing ourselves. We are sharpening our swords. We are wiping the mud off our fluffy slippers from the bottom, okay? Because we're going to be ready. Because no one is going to believe what I'm talking about in 2 years from now or whenever the next top is. Absolutely no one. I'm prepared for everybody to start spitting. Just start spitting. There's no way anybody will accept what I just told you right now because they will just believe that the bull market is just getting started when there's a high chance that actually it's over. And those people who are buying because the Fed is cutting, because the Fed is printing, it's very possible they are the exit liquidity for the deep government insiders who are trying to regulate crypto harder in the next bear market crash. But you know what else they can't regulate? That's right, our friendship. Like, subscribe, press the bell button, all. Tell mom and dad we're still going to make it. We've got a lot of hope to live for. Catch you in the next one.